So this morning we obviously saw that dump to the downside. I was just scanning some crypto. You know, I'm going to do this as a little case study because what I've been really focusing on is developing a nice, a little bit more of a passive model for trading alts. Just because with my funded, I'm really focused as far as like my intraday movements. I'm focused more on indices and Bitcoin sometimes, but I want to still give you guys that are in the private server nice signals for alts. So I'm developing. Been back testing a lot, just a liquidity rate model. Now for ETH here, there's no confirmation yet, but for instance, what I would look for, it's the same model I use for trading indices. Like we would want to shift in market structure with displacement, creating a fair value gap. But the only thing is here, and the thing with this model for a lot of alts on the lower time frames is that sometimes it doesn't give the best risk to reward. So let's just say, it gives a massive move up and there's a fair value gap. Well, I'm not looking to take this much farther than the old range low or equilibrium, so, and it could go higher, but that's just the way the model is. So the risk reward wouldn't be there, but I want to see if we get that shift. There was another one. No, I think I was looking for another one that just never happened. So for TRX, we'll go ahead and recap this and why I wanted to take a sell. So whenever I look at the daily chart, it's pretty ugly, I guess would be the word for it. But we're kind of just ranging here on the daily, nothing really super crazy. But what I see is let me turn this to a cursor. I hate having the line sometimes. So I see we came down, we developed a little range right here, came up, took that liquidity, and then sought after this liquidity, created a new range, right? So we're playing in a pretty wide range as far as the daily chart goes, and it's not really showing a clear intention of where we want to go. But it seems like with this displacement that we are drawing towards these lows overall, because I see all the displacement is down, except over here. But recently it's just down. Looking at the weekly time frame, it's about the same as the daily. Not really the clearest intentions here, except a lot of sell side liquidity building up under this low right here. I think that actually took this low, so it pipped that low right there. Never know, it could move higher than going down to this low. Again, the weekly and the daily aren't really the craziest prettiest charts, but the reason I like to sell on the 1 hour is we kind of formed this range here. We formed a low right here where we moved from, and then we moved pretty impulsively away from this. So the range that I would have been looking at would have been something like this. And you see how we came above this range right here and very quickly broke down. Right, so we got that market structure shift, no fair value gap, but we did leave a nice little supply candle here. And then this morning, the 1 hour, we had a high right there that kind of front ran. At 15 minute would probably be clearer. And this was also moving right into the London close. We pushed up and expanded pretty rapidly from that. So we have a lot of liquidity built up under these lows now. We took one area of the range, and I want to see us move back up to optimal trade entry. That's why I picked that. It's exactly the 705 because we do have a pretty big void here to fill. Yes, supply candle is a bearish order block. Well, I mean, it can be a little different because when I'm looking at order blocks, I like playing them more on like a 1 hour and above. And I like to see the highest volume candle, like a big bodied candle. Like for instance, something like this. Go ahead. What are you going to say, Hoochie? Or was that you?
No, I'm sorry. Go ahead.
Oh no, you're all good. If you had a question, I just wanted you to ask it.
I was just so would this be like considered retracement then, right?
Yeah. So whenever we're looking at Forex pairs now, I'm not really like the biggest TRX trader, so I don't know the seasonality. I'm not like the very versed, I should say. Now, if this were a Forex pair, I would look at this right here That's going to our power through the high of the day. So we moved pretty abruptly. Oops, wrong thing. Moved pretty abruptly from, where is New York midnight? It's going to be right here. We moved pretty abruptly away from the New York midnight up, taking out some liquidity. We deviated from the range we had formed here on the 1 hour and the 15 minute. We also formed some equal lows down below, and then we came above it during the London session, right? And that's important. We went over that in the time and price videos we went over in the private group, and then price broke down, using a 5 minute. We got that shift and fell back into the range, had this little redistribution here, and then saw a massive displacement to the downside. So we took low time frame sell stops under these lows right here. So now I look at it like we came down, we formed a little range down here, we've taken liquidity, so we should see at least some form of a retracement, which oftentimes is the characteristic of the New York session. But I will say, looking at this, I think this was that sort of retracement, if you will. Like this was the wick creation of the daily candle. So if you look, I haven't done this yet, but it's probably going to be right at OTE. Yeah, see, look at that. So when we have this, London manipulation, then a little bit of a London expansion, consolidation through the early hours of the New York session, this would be what I would consider your retracement to the 705. And then massive expansion down. And we had that POI at the 705 as well. So just like here, I'm looking at this in the sense that, I think I was on a 15-minute. There's a breaker right here as well. So I like that. I like that the beginning, it's the beginning of a 5-minute and a 15-minute fair value gap right at OTE. And we have a pretty clear target below, which is these equal lows. So we'll see how it works. The optimal entry would have been up here, but I mean, the second entry, well, hopefully it'll play out nicely. So what is it? I need to move it over. I hate when I do that. I put the position size too early. 6144. There we go. But as we can see, price is just bouncing between one area of liquidity to another, right? So we have price makes a rapid expansion down and the CPI dump. Then we start to form a range. We put in sell stops here. We put in buy stops. I would have said really here would be where the buy stops really lied, but at the same time, it's not the high of the range. So I just drew the high. You can see we came up, took that liquidity, and fell immediately back into the range with displacement. So that tells me that the algorithm is now seeking these sell stops. And if we can get an entry to catch that move, then great. And who knows, I might be wrong, but that's just the way I'm looking at it. Now I wanted to go over an NQ trade. I misordered this morning, but it's okay. I also didn't take the long that I almost took and took L on, so I'm happy about it. So my levels coming into the morning that I wanted to see either one of them. I wanted to see one of them taken. Let me do a rewind just so we can get a good view of what I was looking at. So when we came into the morning, we have a pretty clear range, right? If you ask me, right there, that's it. So we have sell stops down here and buy stops above these highs. And we have to go in the context that, we had already manipulated the range yesterday. We had that seek and destroy or search and destroy model that we talked about. So, the old range was here as the sell stops, here is the buy stops. So sell stops got ran, then the buy stops, then we formed a new range, right? So now at that time, we had this range right here. We talked about ES. I took a sell on ES above these highs yesterday. Looks a little different on ES, but this was that. We talked about that yesterday. And you can see how important it is that, targeting these lows. Now, one thing I'm looking at now is it would have been potentially great just to hold, but I don't really like holding through the closure hour because My Forex Funds, let's just say you're holding between 5 and 6, you can get wrecked if something goes above your stop loss. But similar setup there, took the buy stops and now formed a new range. So price came down this morning right here, right? And then this little market structure shift, it gave the model we use, right? So it gave the model But then look what happened. This is why, and this happened to me for a little bit trading indices, but now that I've really developed an understanding of what's going on and focusing just on the NASDAQ and S&P mainly, what was happening was a lot of people might have taken that because they would have looked at it like, okay, well, we rated a low into a fair value gap. Right, we took this early morning low, got the market structure shift, but then they would have targeted the highs. Now, the reason why that doesn't make sense is because we're late in the week. The overall weekly bearish or bias is bearish. Look how we moved above the weekly open, expanded rapidly down. Now, everybody wants to retrace, but there's really not a reason that we have to retrace. Ideally, we won't see price come back up to that weekly open. It's Thursday. So
what do you mean? We got one more day.
are you trolling me?
Yeah.
Oh, I was like, no, but not like the the overall bias that I see was still bearish for the week. So you have to keep that in mind coming into the late end of the week, because let's look at this weekly candle. If we're bearish, what are we seeking? We're seeking at least, the previous weekly low, right? It doesn't have to, but that would be the first liquidity objective based on a weekly time frame. So at that point, we're showing bearish price action. We have a bearish liquidity target. So why would we, look to long? That's why I didn't take this long. Now, if you took it correctly, there could have been a nice little opportunity, I guess, right? Because you could have looked at it as what's the first, if you're bearish and you've already ran both sides of stops, you're just looking to come back to equilibrium. So let's draw a fib. Let me fix which kind of fib it is. Let's draw a fib on this range. So what happened? Price at this point, since we didn't take liquidity, right? You're not looking at a manipulation scenario. You're looking at something to come up and mitigate or maybe fill other orders. So look in premium for POIs. Right? Bearish order block right above equal highs. Now, I didn't take this trade. I was actually, me and Maine were literally talking about it, watching it. And the only reason I didn't take it, it's funny, we were literally talking this morning about the market structure shift. So ideally, this is a good shift, right? That kind of candle, that's like no-brainer market structure shift, right? And it gave a long entry up to the next liquidity objective that was agreeing with the higher time frame bias. But we came up here and look at this. I literally drew it out and everything. We got a break right there. But to me, I didn't like that as far as the displacement. The displacement was here, but then we halted, right? And came up and then grabbed this low. But I looked at that as a potential liquidity grab, and I wanted to give us a 3 drive. So what I was looking for, I was watching, wanting to short, and I wanted this. I wanted another push up and then that shift with displacement giving me a clear entry. But as we can see, price did not do that. That was the entry right there. This was the entry of the day. And the thing is with this, and this is something, the overall target would have been the range low. But if you're playing in the context of your higher time frame, it's Thursday, right? We're going to probably expand lower into that previous weekly low. So another thing I've been back testing is if we are trading pro weekly bias and we're using the power of 3, we're looking at this as, okay, this week, and we'll draw a vertical line. We're looking at the week, we're trying to form the weekly candle. And, we're looking at something like this. We want a down candle. Let me just visualize this for you guys. And let's just say, you're a swing trader. Well, up at this point right here, this is where you're at. You're forming that wick. That's what all of this is, right? You're moving above the weekly open into a higher time frame price delivery array. Guess what was there? Daily order block. You're in a premium of the impulse range. So you have price delivery arrays in a discount. You're in a premium. You're at a POI. Price is moving up violently from the weekly open into high volatility news. And then we see massive displacement. Was I in the 1 hour maybe? Yeah. So all of that is just that manipulation. And you see on Tuesday, we have that CPI news come out, price taps in the order block and expands down. Now, everybody that doesn't look at price like this looks, they just want a long. Right? They want a long back up here to the supply, because that's what a lot of these Forex courses will teach you, is that price has to always go back up there. But what people fail to realize is that a larger narrative is in force. So whenever you're trading pro your weekly bias and you get an entry early in the week, one thing I'm learning is to hold that shit. Because, for instance, this trade I took on Tuesday that we went over, I don't know if we went over this one or not. If I would have just held that, it'd be at 15R right now. Now it would have came back up, gave a little scare, but that redistribution where the demand failed after the initial CPI dump, that would have been the move. And you could have targeted the previous weekly low, which I want to say was this low over here. So that's last week, right? The 7th. Yeah. So, that would have been a, 18R trade, and you could have caught that and just held that through the entire week. Now, in hindsight, everybody is a god. I'm not trying to sit here and say that obviously I didn't do it, but I'm just sharing some things that I'm taking note of with you guys. So, for instance, with ES, same thing. I got a short yesterday. This one would have been a little bit more stressful. And again, with me, with My Forex Funds, the only way I would really do this, like that NOS one, that would have made more sense, because I'm not expecting us to run aftermarket hours up to my entry. But let's just say here on SPX, I mean, look, once you get that good entry, right, where you're mitigating the true institutional involvement, it's probably not going to come back to that area, because that if you do it right and you get if your timing's correct and you get everything on point, you're probably getting in and you're using your stop loss as a protected high, because you're getting into the same area that smart money got in, because that's where their orders were left at.
Yeah, you'll know your trade's good if it immediately fucking starts moving in your
Exactly.
direction.
Exactly. But see, you could hold this too and just close it on the week. So I'm developing that strategy. I'm really trying to get more data on it and get it very fine tuned. But from what I can tell so far, the pro weekly bias entries you get Wednesday and before, if you don't, I'm not saying to just hold the whole position. I think that can result in a lot of wasted time and wasted opportunities. And whenever people are learning to trade and learning analysis, you feel like you're doing the wrong thing to not hold through a lot of stuff. But like, I'll tell you from experience, like I'm happy that I took the trade where I took it, because here's the thing, in hindsight, we say that, but let's just say you were wrong, right? And you had, $4,500 on the table, and then you get stopped out for $1,500. That's bad for your port. It's a waste of your time. But the real damage done there is psychologically, because I don't care who you are, that fucks with you a little bit. Maybe not a bunch, but so my thesis here would be to take maybe 80% here and let the rest ride if it's pro trend on a Tuesday or Wednesday. Monday, I wouldn't really worry about it, because Monday usually is just liquidity being engineered. Sunday night and Monday is almost always just early traders getting liquidated. Even if you were correct, like let's just say you just thought it's going to be a bearish week and you just shorted on Monday, you got wrecked, right? And it happens every week, every fucking week. I haven't been watching the same setup on Bitcoin. Let me just see. I'm curious, actually. Yeah, same thing. Because Bitcoin and indices are about the same thing at this point. So I had this breaker, and then I looked and I said, I don't even think it's going to come back up there. And we didn't. Because everybody thinks, oh, we have to go back up. I was looking at a potential move back up to this high, but now looking at this, we talked about this yesterday. And look at this paper trade I took, guys. This is really sad. I wanted to take this, but I didn't, just because it wasn't time. And I'm trying to really just stay disciplined with timing my entries and not being a market participant every time that I want to be. So I'm just, I take the paper trade, just watch the analysis, and, you kind of miss or and you kind of get FOMO. But at the end of the day, what it does for you psychologically is far better, in my opinion, because it builds your confidence in your TA. And then the next time it is time to strike, there's, like, let's say, you take an L, well, it builds confidence in your system, right? And once you develop something where you know exactly what you're looking for, and if you get that, you enter, And if you don't, then you don't enter. It helps with your psychology because you know that this system works. So for instance, I'm only trading, this was the entry model that I look for, right? We had a 1 hour high get taken, a 15-minute high, and then the 1 minute entry model right here. Now this would have been, you could have entered a little higher, but the way I looked at it was here was the displacement shift right there. This to me wasn't, right? That wasn't the shift for me. I mean, I guess you could have got an entry there, better entry. But to me, this was the impulse move that took, that gave me that confirmation. We closed under it. So I looked at this right here. I said, okay, if I was really taking this, I would just execute right there. Because to me, what was that? $10 is not worth, I just mark it. People say, oh, it's just FOMO and chasing it. I don't think so. Now, if it was a lot, it's different. If it affects your risk reward, like let's just see, it would have been a little bit better for sure. But to me, whenever I'm, in the market, I'm not that, crazy worried about it. So when I look at this as, kind of a study and to learn from it, because I'm not sad, I kind of am, but I'm not like beating up on myself for not taking it because it was outside of my regimen, right? My trading plan is trading liquidity raids during the New York session, right? This wasn't during New York session. So the model was there as far as the analysis, but it didn't meet my rule set. So paper trade it. Nice to see the analysis hit. I'll probably end up starting trading my little, I have a little Binance board I threw a little bit into so I can start trading alts with you guys because I know some people miss the alt signals, but still wanted to share this with you guys, even though I kind of misword on it. And you can see that I wanted it just to come back down to equilibrium. So when I look at this, I just looked at the first, area in equilibrium, which was just under, actually, I think it just was, I drew this on my phone. So I probably just tried to put it near EQ because that's where I would have looked to take it. But now looking back, the true intention was down because I looked at it originally like this was the first deviation, right down here. And I'm just going to delete all this just because I want to make this a little clearer. So originally I saw that range as this. Right? And I saw us deviating here and then moving back up, and I wanted us to come above. But now looking back, this was the true range. This was what originated, right, from that move to the downside. So when we look, once we have, this is a good continuation pattern that I notice with indices of Bitcoin. So the first range that is made, not the first initial bounce, because that always gets fucking smacked. I mean, I guess I shouldn't say always, but you'll never catch me playing that. This is where you start to see that range be developed because now we've developed a low time frame area where there's going to be buy stops and where there's sell stops. So price comes above the buy stops. Holy shit. I drew that candle. It's like completely opaque. So it comes above the buy stops. Then we come down and take the sell stops. So after you have this kind of price action, right, there is no reason that you have to come back up here. Because oftentimes, that first bit of manipulation, that's where the institutions are really getting involved. Right there. And that imbalance. Guess where that also was? Right above equilibrium or at equilibrium of the impulse move that pushed us down and actually moved us into this imbalance in that 4-hour breaker block. So then you get your initial sweep, you've created stops. Stops get ran one direction, then they always get ran the other. But after they ran that second direction, almost always, it just looks as a continuation. All right, so after price came back up and it moved to a premium, then you saw, you just want to look for areas of potential liquidity. Or POIs, whatever you want to look for. But we came above that 1-hour high. I think this is a 15-minute, so it's going to be a little. Came above this high right here. That because when you look, and this is why it's key when you're identifying areas of liquidity. I know that I had a lot of problems when I started out because I just wanted to pick the highest and lowest points. But you got to pick the points that we moved rapidly away from. Did we move that rapidly away from right here? No. Did we move that rapidly away from right here? Definitely. That's why we reacted off that. And this will help you with taking profits as well. So let's just say you longed from down here. Maybe you wanted to target here or here, and you got, real sad, right? Well, you just got to ask yourself, what area did we move away from? Because that's where there's going to be institutional stops. Now, where we're at here with indices, I'm not really like forcing anything. I might look for a PM entry. Let me delete this little range right here. You know, we did take out a ton of sell side liquidity. I think we formed on the 1 hour. There's a nice little imbalance right here. So we'll see how we move into the lunch, or going into the end of lunch, I should say. If we can maybe engineer some liquidity, maybe some equal highs, something like this, and then get a rate up here, potentially could watch the 1 minute for continuation through the day. Another thing I wanted to share with you guys, actually. Glad I just thought of this. So something else I've been using recently is, let's say if you don't catch a move in the morning and you want to catch a move in the afternoon. Well, if you're playing a continuation, and which means you think that, you know, if we had a bearish move down in the morning, we're going to have another bearish move. You can take a fib and draw it from the beginning of the morning. Like, let me go to 5 minute, it'll be a little clearer. So the morning move was here, right? You know, yes, the market moved a little before this, but I see where was the impulse move started. It was right there, right? And we're not talking about pre-market with CPI. Obviously, that was the massive move. So I see that this was the general move of the morning. And if you take a fib and draw it on that and look for the 100% extension, because oftentimes in the afternoon session, once you come back to equilibrium, which we did, we rated those highs. Oftentimes you're going to move in a measured move, the just same thing you did in the morning or close to it. Now, I wouldn't just pin this on the wall and throw it, but the reason I took this one was because the 1 hour had sell side liquidity right at the end of it. So that's another strategy you can play for continuations, but it's important you don't draw it across the whole day. You just want to draw it across the actual impulse move. So a couple people we have some requests. 1 second, let me look at the Discord.
Do you have a video on deviations?
I don't. I can make one soon. What's the first request? To be fair. Okay, Adam. I was actually just looking at this. So Adam, I want this high to get taken into this order block. It might not, but that's kind of what I want. I need to set an alarm for that. But hold on 1 second. But I would like a push above that, because the way I look at it with Adam, it's kind of in its own world recently, right? I'm looking at it in its own context, not really in the context of the rest of crypto. And I look at it like the weekly time frame's a little iffy because we didn't come to a premium, right? So that alone makes me not extremely, ready to short. And then I look on the daily and I see, look what we have right here at that equilibrium, or close to it at least. The POI itself touches equilibrium. The tap wouldn't. The daily structure to me is pretty clearly bullish still. And we're just making higher highs and higher lows. Some manipulation right there to stop out some traders, but you can see that we preserved the lows. So I just see it as, bullish order flow as of right now. Price just came back down into a discount of a daily impulse move, filled gaps, right? I mean, if anything, this would have been more of a long, because I was talking to someone who wanted to short it, but I look at that, we came down, So honestly, it didn't really give an entry, but if it would have came down somewhere in here, been a nice entry. But now at this point, I see it going for most likely the highs. I mean, I could be wrong. There's a lot of liquidity up here. That could have been the tap. Maybe it tapped it on some other exchanges. I don't know. This is just this is the exchange I'd be trading it on, so I'm going to watch it on here. But I look at it like, yeah, this was a bearish little range, but all it was doing was sending us back down to discount. So until the daily bias would be bearish, I'm not going to short it, especially with all of that. So if anything, I would just, because I see us, yes, we're in this imbalance, right? So we could reverse here, but the daily impulse swing is still pretty bullish to me. I see a lot of liquidity above these highs, front running that POI at a weekly premium. Well, equilibrium, I guess I should say. So, with that being said, I would just wait on this one. I think if crypto does start to really, really fall, it could provide some nice sells. Because if I'm looking at the weekly, it's been moseying on up here, not really leaving any pockets that would stop price, and I know that there's a lot of fundamental stuff that's like Atom 3.0. I'm not very versed on what that is, but I know that, similar to an ETH merge in the sense that a lot of people that are fundamentalists will be looking at that as like, oh, Atom's going to the moon, and all this. I don't know if they fixed their inflationary issue, because I know that that was a really big problem for Atom. I have no idea what they're fixing. I would, if that's the case, you could see some supply shock, and that's why we're moving up. But I don't see much displacement. I see this more as mitigation, because we're coming up into this imbalance near that daily order block, not leaving any kind of imbalances along the way. Like there's not one imbalance here on the weekly. So if we just were to start drawing down very violently, I would say you're drawing to first these equal lows, and then after that, this sell side liquidity down here. That's a really big move. So again, I don't think there's any reason to rush. Now, what would switch my bias is if we did come down and swap these lows, we'd probably form some form of imbalance on the way down, and that could be something you keep an eye on. So continuation until proven otherwise.
Mr. Casper, I have a question.
Yeah.
Could you head over to the NOS chart real quick, or any of
Yes.
the indice charts?
Yes.
So going back to 2016 ICT, what do you think about oh wait, go on the 4 hour?
Oh, 4 hour, okay.
Yeah. What do you think about liquidity voids versus imbalances?
I just view it as a liquidity void as an imbalance on a higher time frame. That's just this simple way I look at it.
Okay. I wanted to ask because, I mean, you have better ICT knowledge than I do, but I remember in the 2016 videos, he goes over how imbalances, like, they get tapped, right? But liquidity voids get filled.
And then usually
completely,
rated.
traded back through.
Yeah, exactly. But, if I notice that it's a liquidity void on the 4 hour, eventually that will it's like over here. Like it didn't get all the way traded through in the 4 hour, but like, so let's just say we have a 4 hour liquidity void. I'll go look at the higher time frame imbalance as far as a target. You see what I mean? Because that's the way I look at it, because I've gotten my feelings hurt. Like, for instance, here's another great example right here. Now, this will probably get traded through at some point. Like the key with a lot of that stuff is, yeah, it'll get filled, but when? You know what I mean? Like, so,
Right.
But you know what I'm saying?
Right. So I'm basically asking, do you think liquidity voids are supposed to get filled, or is it a possibility that we'll just keep creating more imbalances?
Eventually,
we'll kind of treat it like an imbalance and just kind of keep bouncing off of it.
Eventually it'll get filled, but like for immediate bias, I just look at like what I think we're drawing towards and like the kind of the institutional structure. So like, and this is just the way I look at it. I don't know if this is really like would agree with some of ICT stuff. This is just kind of like what I've developed as far as what I've seen work for me. Is I just look at the daily and the weekly, and I really focus on drawing liquidity more than any of that. But I'll use that to my to complement that. So like for instance, in this scenario, we were drawing up. I originally had said this high somewhere in this imbalance. I didn't think it was going to get all the way full, to be dead honest. But I looked at it like, okay, when we were down here, as soon as we formed this right here, So like as soon as we made that second higher high right there, I was like, we're going to premium. No question. You know what I'm saying? Like it's no question going to premium. And then I look, okay, well, where are we going? So then I could say, okay, well, there's a 4-hour liquidity void. You know what I mean? But if I were to only focus on that, it would fuck my bias up because I would be looking for this. You know what I'm saying?
Right.
But that's
Okay, I see.
That's what I'm saying. Whenever I look at it, but I just, to be honest with you, bro, and you'll see this coming from like Bitcoin to NOS, I literally don't even really use the 4-hour chart on indices personally.
Yeah, I could see why. Like that 4-hour chart you just looked at, you saw like a very clean supply zone, but it never got tapped.
Bro, the 4-hour is just like will like put you in a bad mood. Like I swear to you, it's if you had a market maker sell on a 4-hour or market maker buy, like this got mitigated like gas if you look at it like that, and then you can
Well,
go.
it technically is mitigated because you're
it traded back into it.
Well, no, because the whole that whole down move is supposed to be your demand creation.
Right,
I bet
all
you
the
if
way
you
up
draw if you draw a GAN box on it, you probably tapped a discount of that whole zone.
Yeah, I agree with you. That probably went right to EQ. If you go to the wick to wick, it went right to EQ, I bet. But or actually a little lower. But yeah, like you said, discount. No, so like this, like you said, it's just like liquidity voids, like this right here on the 4-hour. That's going to be probably a daily order block. Let me actually see. Not always, but a lot of times it will be. Oops. Yeah, see like that right there. That's your best friend on indices is your daily 1 hour, 15, 5, and 1, and weekly. But the 4-hour, I really don't even use. Like just because if you back to like and another thing too, I don't encourage trying to use like supply and demand on me personally. I'm sure there's a lot of great opportunities on it, but like 4-hour supply and demand, like like photon logic, I would never use that on indices. That's just me. But I like looking at it from strictly liquidity because in my experience, and you trade more like that already, I know that, but the best trades are going to be raids, and it's always during usually the morning session, in my opinion. Not always, but the morning session usually gives the better entries. The reason I really like just using liquidity is because it stops me from taking a lot of trades. Like this morning on NOS, I don't know if you were in here, but this trade right here, because like a lot of people look at it like, okay, imbalance full, 15-minute structures bullish, 4-hour choach, right? That's like, you know what I'm saying? Because that's what that logic would train you to do. And it wouldn't even be wrong. Like you wouldn't even be wrong for it. You know what I'm saying? Like this would have been, oh, fuck, like here's my 15-minute confirmation, we're respecting bullish order flow. So you come back down to this area, you come right into it. What does the 1 minute do? Oh my God, like you can't even say that's not confirmation. All this down here. Really, I guess I should have marked the zone, this whole zone down here, because you'd mark to the wick low. So you come down into that zone, fill the imbalance or demand, whatever you look at it. There's nobody can tell you that's not a confirmation. If you're using the 1 minute to confirm that zone, the price comes up, imbalance, and then you just get shit on. But it's because of trading without realizing, like what's the true intention. And at this point, I look at it like we rated the buy stops. Well, I'm sorry, rated the sell stops, then the buy stops, created a new range here, right? Then we rated those sell stops, rated the buy stops. So then we came back down and just all this was like, and I literally messaged Mang this morning. I was like, if we take the 830 lows, I think it was 815. No, it was 830. I was like, if we take the 830 lows, I would just look for a move up to premium. And that's exactly what we did. And premium of this was the impulse range that we were trading within. So we came down, took those 830 lows. Yeah, it gave an entry, but I don't want to take that just because one thing I learned the hard way with indices is you can get good entries and then you just get burnt, like at break even or for a loss because of improper targeting. But it's just from not understanding the range and taking that weekly bias into perspective. So for me, it's no raid, no trade with indices. Like never. I'm not touching it if there's no raid.
No raid, no trade. I like that.
You feel me? Like I'm just not. And it makes me like today, I FOMO'd, like I didn't actually FOMO, but I FOMO'd like a little bit watching this move up, but I was like, no, like just whatever. Like if it misses, fuck it. And then I watched it dump. What's funny is I almost took this goddamn sell, but it didn't give me the displacement I wanted because I looked at it like, okay, we had these 15-minute equal highs right here and this order block right here. And so we mitigated that in the potential reversal zone. And if this candle would have just closed under this, or this candle would have closed under this, I would have shorted immediately, like upon the closure. I wouldn't even have waited. I would have just shorted right there. Stop loss above the liquidate high. But I watched
I think I was looking at that too on the 1 minute.
Yeah, I wanted a 3 drive.
That's where that type 1, type 2 comes in, you know?
Yeah. And honestly, it's like...
it's pretty hit or miss on the 1 minute, I won't lie.
Yeah.
Sometimes you'll liquidate and it'll be like reaccumulation.
Yeah, so this right here, like that's why I was like, nope, it's gonna, because this is what happens. Like when we were on live stream last week and we took those notch shorts, they ended up reversing. We got like 50 points, nothing crazy, and that was a great example of I had targeted too far on those notch shorts we took. Anybody who was in the stream last week, you probably remember what I'm talking about, because we ended up getting some nice profits and then it reversed, just like how the people in longs here. So it's like the same thing, right? But this, to me, I looked at it like, okay, whenever we have these areas of liquidity like this, I like seeing 3 drives a lot of time on the 1 minute. And you'll see that second drive oftentimes will give you, quote, an entry if you're looking for it. And then price will come up, take this high, then give you the entry. Now, this morning that didn't happen. It's okay. Whatever, missed the trade. It's never fun, but it is what it is. Looking back, I see, okay, that was the signal, so to speak. But I'm not really mad at it because, it didn't really fit, what I wanted to do. So I can't be upset that I didn't take it, because at the end of the day, following my system and being disciplined, that benefits me more than the P&L from this one. I genuinely believe that. Like, I know that sounds crazy to some people, but I'm in this for the long game. This is my profession. So I look at my psychology while trading, and me as a trader way more than I look at like each day, because once you, like, anybody like JL, you'll agree with me. I know anybody who's funded is going to agree with me, or anybody who's been profitable for a while. The analysis is the fucking easy part. Your psychology is what defines you and your limitations. That's what's going to make you. Are you going to be a 5-figure trader? Are you going to be a 6-figure, 7-figure trader? What are you going to be? And that's not going to be based off of who's the best analysis or who's the best analyst and does the best analysis. It's going to be based off of who thinks properly and who maintains their edge and is robotic to an extent. That's who's going to be able to take trading to the next level. And that's my opinion, right? But now here, what I want to see, like we were just talking about, I'd like to see some consolidation, potentially see a lick raid with that 1 minute entry model into this imbalance. I'm not trying to be a predictor. It's my new term. So many people ask me, what if we go to the weekly open, create a fair value gap, reverse, raid liquidity? And I'm just like, I mean, Jesus, like that's possible, but like, fuck, man. You know what I'm saying? Like, I have no fucking idea. But only thing I look at is like, where are we at now? So, I don't want to push that narrative like I'm predicting it. But if we get that, I might take a sell. Might not. This week's been really good, so I don't care to just chill either. And I'm sad about this. Not sad, but this Bitcoin paper trade. It's just funny. I deleted it, but it was like right there. Could have just held that bitch to the range low. But again, I learned from that. I learned from that more than if I would have taken the trade. So, it's silver lining. You always got to stay optimistic and be objective whenever you're looking at, your trading and your performance and your analysis. Because I cannot stress it enough. Oh, here's another thing, actually. Sorry, guys. Caffeine's got me. But there was SMT divergence on the S&P right here. So this could have been another confirmation, and I want to start watching both. I just haven't gotten the habit of it. So we see right here, we didn't make that higher high. Yes, we did. So that could have been even more confirmation to go short on NQ, even if you're not trading the S&P. Or, the S&P, it really didn't give an entry, like, in my opinion. I mean, it didn't even break structure, like, unless you're talking about this. And it's like, I mean, I wouldn't have looked at that.
Is that the 1 minute?
Yeah.
If you go down to the 15-second, your internal.
Oh, I'm sure it did on the 15-second.
Yeah, your internal swing that broke structure to the upside right there, that small
Yeah.
reaccumulation, that's where you swapped bearish.
Yeah, no, for sure. I personally don't use the 15-second, but I'm sure that it'll oftentimes give, like, look at this. It's going to be like a straight sniper.
Did it hit that breaker?
That's probably actually what it is right there. I didn't actually. I thought it did for a second too. But this fair value gap, I guess the opening of this is where the order is really, yeah, look at that candle shelf off of it. One thing I was doing with the 15-second was like, I was testing it, but it just wasn't consistent enough, was the confirming the fair value gaps. Like, let's just say like the 1 minute did break and then the 15-second moves into it. I would use it to confirm. But what I found was half the time it just gave a shittier entry. You know what I'm saying? Like that 1 minute model, if you do it right, hits. There's no need to confirm past it for me. But another thing too, like I tell people that like it's cool and like fun to like look at like, oh, 15-second entry, like 100R. Like, fam, you're not taking that unfunded. I'm sorry. Like, if you are, you're crazy because you don't know what you're risking, because your fill is not going to be your stop loss. It's not. Like, you can go ahead and kiss that shit. That's all pipe dream shit. That's demo shit. Because, like, bro, like if you have like, a $2 stop or a $1 stop, let's just say on ES, like, I mean, you can get like a $4 or $5, but one, it may not sound like a big difference. That's a huge difference. A 1 minute candle can move, 4 or 5 points on ES. You know what I mean? If it gets volatile enough. And oftentimes, if your stop loss is in the wrong place, it's going to get volatile, your stop loss, because it's going to absorb that liquidity and go another probably a couple points past it. So, let's just say you use some 15-second entry and, it's like, oh, 100R. But let's say the one time you're wrong, because you're going to end up being wrong. Well, instead of just losing 1% of your account, if you're risking 1%, you might have just lost 3 or 4%. You know what I mean? And it's like, maybe you took an L earlier that day, you just lost your account if you hit the drawdown. I mean, it's just like, to me, it's like a lot of that shit, bro, is just like, it's just pipe dream demo shit, bro. Like a lot of the shit I see on YouTube, it's just all people selling fucking dreams. But, and that's, I don't know, maybe people disagree, but I'm gonna look at some more alts. Is TRX coming back up? Okay, yeah. There we go.
Fucking the miners are moving to ETH Classic.
Yeah, they've been talking about that for a while. I have a buddy who's pretty big on Bitcoin mining. He's big on Bitcoin mining, but he's been telling me for a while that Ethereum Classic was going to be a move for a lot of the miners, because a lot of people don't realize, but Ethereum miners, I think, made more than Bitcoin miners did in 2021. And, they're not going to be happy about that shit. Plus, another thing with proof of stake, like all that is just centralizing Ethereum without centralizing it. That's all that is. It's like, yeah, we're decentralized. You just have to have 32 Ethereum to be a node. It's like, okay, it's real decentralized. It's like, or you can, give us half your profits to be a part of our node. It's just a push. But I mean, it does help for the usability of the platform, but
the supply of ETH Classic is not that it's not that big, man.
Yeah. Interesting little PA here on ETH. I'm not trading this right now, but a forward test. Little void right there. Would focus on the lower one, most likely. Could see a move back up to retrace some of this move down. I'm just not going to trade it during the merge. or like the day of the merge, I guess I should say. TRB. Somebody asked if I avoid any time frame in crypto. You know, with alts lately, I just have been not looking at anything less than a 5 minute. But the 1 minute does give good entries. I'm not saying it doesn't. I just know my personal style right now. I'm not sitting there camping on alt charts. So 5 minutes probably lowest you're going to see me on. Bitcoin, I'll watch 1 minute charts and stuff because that's more what I'm actively trading. But alts, I look at kind of like a side hustle. Ideally, just want to swing or trade, not like a long-term swing, but just like a couple days in the trade type thing. TRB. I'm not sure what that box was. Oh, it fell through the breaker as I was watching that breaker. Let me go ahead and redo all this.
Yo, what's up, Casper?
What's good?
Bro, is there any particular reason why you trade TRB so much? I'm just curious.
No, I'm not. This is just somebody requested it on YouTube.
Yeah, no, I just like my dog stays on TRB's top, like not in a bad way. I'm just like, bro, do you know something I don't know?
Fuck TRB, honestly, that shit. That was like we got in like longs. ADA just fucking rails, goes like 7R or something. Rune went a little bit. I didn't make anything off that. I got stopped at break even. We took a L on Sol, but it was nice. And I was like, on Sol, we got invalidated pretty quickly. So we took the L, whatever. And then TRB
was lagging a few days, right?
It was just like, fuck you. Like it would like every time the market pumped, it would have like the most minuscule, pathetic move. And then every time the market dumped, it was just like fucking massive death. I think it was like, I don't even know. I think it was over here in this region. I can't remember. But oh wait, no, I'm on the daily. I'm fucking tripping. I'm sorry. I thought it was in the 4 hour. I was like, wait, that's November. No, it was over in I think this region. Yeah, it was like this. Like we got in somewhere here. It just literally just chilled. The market's just flying right here. This was the market pump. TRB moves like nothing and then dies. But anyways, looking at the weekly chart, the weekly seems pretty clearly to be drawing down towards this imbalance here. So I'd be looking for a move down into that overall, before you start to see any kind of bullish weekly scenario. Yeah, you got a daily change of character, I guess, if you look at it like that and you're in that demand. If you were to try to long, I would require like 4 hours shifting, bullish, which would be quite a bit, be all the way up here. I'd probably be more short biased, if you want my opinion. I think we're coming for these lows. Again, looking at it from a range perspective, and above that 4 hour high, the 15 minute, that's actually clean. Once we got that displacement break of structure, which really was right here, I look at those lows getting taken. I know it's not structure. I mean, you could look at it as this. But I just look at the displacement move, fair value gap entry. Like as soon as that second candle closed and created fair value gap, you could have entered anywhere in there. Stops above that. And then target the lows. That's the narrative I see unfolding here. Not great risk to reward. I can't say I would have taken it. It's not bad, but just for the for a higher time frame move. But that's what I see. You're probably going down for these lows. You could even maybe look to take it down into that weekly imbalance, make it more worth your while. But that's kind of the narrative I see playing out. But on that note, I do have to hop off here. I got something I got to go do. I'm actually gonna be late. I just realized. But yeah. So if you guys have any questions, as always, just feel free to reach out. Yeah, that's about it, guys. I appreciate it, and I'll see you tomorrow. Peace.